Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings for the first quarter of 2023, and that stock is Pepsi. And we can see that over the last year, Pepsi is up 17%, while the rest of the market is up around 6%. So they are outperforming the market over the last year. And keep in mind, this stock growth is here without taking into account dividend payouts. So this isn't just a return that shareholders got at 17%. The return for shareholders of Pepsi is actually a lot larger than that. And so in this video, I'm just going to look into some of the earnings results that came out for the first quarter of 2023 for Pepsi, and then I'm going to compare them to some of their competitors, as well as look at their company stock from a value investing perspective by using a discounted cash flow model to figure out the intrinsic value per share for PepsiCo. And so we can see right here in their quarterly report for the first quarter of 2023, this is their income statements comparing the first quarter of 2022 to 2023. And during that time period, net revenue increased from 16.2 billion to 17.8 billion. So pretty good growth there for Pepsi year over year. But unfortunately, we can see that for their bottom line net income, that decreased from 4.2 billion to 1.9 billion dollars. So even though their revenues increased, their costs of doing business in the first quarter increased a lot more than their revenues, and as a result, their net income ended up decreasing. Then we can see right here on page 6 their cash flow statement comparing the 12 weeks ended in March 2022 to March 2023. And during that time period, their operating cash flow used for the first quarter of 2023 was 392 million, which is up from $174 million. So they used more cash in 2023 than in 2022. And then also in their financing activities, this is where we can see their dividend payout and their share repurchases. They paid out around $1.6 billion worth of dividends to their shareholders in the first quarter. And then they also repurchased $160 million worth of common stock in the first quarter of 2023. And so they basically returned slightly more capital to their shareholders in 2023 than they did in 2022, up a little bit in dividends and then also down a little bit in share repurchases. And then lastly, right here, we can see their balance sheet, and we can see they're comparing their balance sheet for March 25th to December 31st. And during that time period, total assets increased from $92 billion to $93 billion. And then we can see most of their business is financed by liabilities compared to equity. They have $75 billion of liabilities and $17 billion of total equity. And then of that, they have retained earnings that increased from $67 billion to $68 billion. So that obviously gives them more cash to redistribute to their shareholders in the future. And so now we can see this discounted cash flow model. Yahoo Finance is basically estimating that Pepsi is going to grow at 7% for the next 5 years compounded annually. So I cut that in half to 3% to be conservative. They had $5.6 billion of free cash flow in their most recent full year, a net debt position of $36 billion on their balance sheets after subtracting their cash, and they also have about 1.38 billion shares outstanding. That puts their estimated intrinsic value per share at $29 per share, which compared to their current share price means that Pepsi is way overvalued at $191 per share compared to this $29 mark according to Yahoo Finance's growth rate estimates. And then on the right-hand side here, I compare them to Coca-Cola and Keurig Dr. Pepper, which are two of their biggest competitors in the snack and beverage industry. And we can see that in terms of gross profit margin, Pepsi comes in second place to Coca-Cola. They come in second place to Coca-Cola in net profit margin as well, although they're pretty much tied with Keurig Dr. Pepper at around 10%. And they also have a 9% return on assets compared to Coca-Cola's 10%. They have the highest price to earnings ratio at 40 times earnings, and they also pay out the highest dividend per share at $4.53 per share. But keep in mind, the dividend per share is a little bit misleading just because obviously each of these companies has a different share price. I think Keurig Dr. Pepper has a share price of around $20 to $30. Coca-Cola's is around $60, and then Pepsi, as we saw right here, is around $191. So even though the dividend per share looks a bit higher, if the share price is higher, then obviously you have to account for that. But according to this, just based off of their financial ratios, it looks like from a profitability standpoint, Coca-Cola is doing the best. But as we touched on in the last Pepsi video that I made for their fourth quarter of 2022, there was an article that pointed out that Pepsi's dividend per share growth rate is a lot higher than their competitors. So even though they might not be paying a higher dividend yield than Coca-Cola at the moment, over the last few years, their dividend growth rate has been a lot higher than Coca-Cola's. And as a result, they've actually returned a lot more to their shareholders, historically speaking, than Coca-Cola has. So it'd be interesting to see where this goes from here. Obviously, these are all really good, high-paying dividend stocks, but from a financial ratio perspective alone, it looks like Coca-Cola takes the cake here. And lastly, I wanted to compare them to some of the other companies we've looked at. In terms of share price compared to intrinsic value, we saw that PepsiCo is trading way above their estimated intrinsic value. They have a $191 share price compared to a $29 intrinsic value, so they aren't doing good enough to make it onto the board for that. ExxonMobil, GE, ConocoPhillips, and Google are the only companies we've looked at so far that were trading below intrinsic value per share. In terms of growth rate, we saw PepsiCo has an estimated growth rate of around 7.8%, so that's not good enough to get them onto the growth rate table here. And then we saw in terms of profitability ratios that PepsiCo had a 10% net profit margin and they had a 53% gross profit margin, which is good enough to get them onto the gross profitability table here. Adobe still holds the number one spot at 89%. And then we can see in terms of net profitability, 10% is not good enough to get them on the board. Microsoft holds the number one spot at 36%. And then lastly, in terms of comparing them to the other companies we've seen based on their stock performance over the last 5 years, we can see that PepsiCo returned around 94% over the last 5 years, which actually is good enough to get them onto the 9th place spot here. So I'll have to adjust that. They are doing a little bit better than Nike, so we'd probably push Nike down the 10th place and then put Pepsi in 9th place there. Tesla obviously holds a number one spot at around 781%. So not bad. And also, you have to keep in mind that PepsiCo, even though this says that they're up around 94% over the last 5 years, this isn't taking into account the dividends that they've been paying out to their shareholders over these last 5 years. So their actual return to shareholders is probably a lot higher than 94%. So that they would take the 9th place spot on this table here. So I'll adjust that for next video. But based on that, we can see that in terms of stock performance and gross profitability, they're doing pretty good. They're still competitive compared to the last 20 to 30 companies we've looked at. They do make the top 10 chart. But in terms of net profitability, growth rate, and share price compared to intrinsic value, they're not doing that good. They're not trading below intrinsic value at the moment. And then compared to Coca-Cola and Keurig Dr. Pepper, they're very competitive, but the profitability competitive edge definitely goes to Coca-Cola. So interesting stock here. I'd love to know what everyone watching this video thinks about Pepsi. Is it a buy at the current share price? Let me know your thoughts in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.